Good afternoon and welcome to BizTech Asian Midday Market Watch on the 12th of June. It's a Wednesday. I'm Samantha Voon, and our guest today is Zhong Liang, Investment Strategist and Chief Investment Officer at Standard Chartered Bank. Zhong Liang, welcome to the show.
Happy to be here, Samantha.
Okay, first let's have a look at the Asian market performance today. We have the Nikkei 225 in Japan down 0.59%. In Shanghai, it's down 0.02%. In Hong Kong, the Hang Seng is down 1.52%. In Australia, the ASX is down 0.61%. In Korea, the Kospi is up 0.45%. Singapore's STI is up 0.16%. In KL, it is up 0.14%. Zhong Liang, what are your thoughts on today's price movements?
Yeah, actually, I'm a little bit surprised to see that some of the markets are in red, especially after a very strong overnight US markets session that we saw last night. I suspect, right, it could just be, trader investors staying on the sideline in anticipation. Again, two very key events that are coming out tonight, right? You have the CPI and also the FOMC rate decision tonight as well. I think the markets is just a bit more, staying on the sideline. In the meantime, I think in China, Hang Seng, we saw quite a huge decline there, I think 1.6, I think from what I saw from the figures. I suspect, again, I think that is due to the lackluster CPI data, the PPI data that came out. That probably weigh on investor sentiments a little bit.
Mm-hmm. Okay, so, for UX stocks, we had it in the record highs yesterday. What's moving the markets, Zhong Liang?
Yeah, indeed, right? US stock, they closed at record high on Tuesday. And I think a couple of factors here. One is the lower bond yields that helps. And the lower bond yields actually came after the strong auction demand. And lower bond yields actually helps the US tech stocks actually rally quite strongly. And in fact, US tech stock led the entire the US equity yesterday. And the other reason that helped as well was the fact that Apple, the Apple share actually rose to record high as well. And that came after the sharing of their AI features, and I think that got quite a couple of analysts excited over their AI features as well. I think for us, technology and communication stocks that has been driving most of the US equity rally in sort of recent months and this year as well, and it continues to be these two sectors continues to be two sectors that we are overweight on. And if you look at the earnings revision for these two sectors, the technology and communication sectors, they are driving corporate earnings for this year as well, right? And we believe that the eventual pullback in bond yields, which we have seen last as well, that would likely benefit these two sectors, right? Given that they are yield-sensitive sectors. And I think if you take a step back looking at the broader US equity, we believe that US equity will continue to perform quite strongly on the back of the revise in higher revision in earnings that's led by the AI.
Mm-hmm. Okay, so we also saw weakness in France assets yesterday. Do share your thoughts on what's happening over there.
Yeah, you're right. I think maybe just for context, right? If you look at France index, the CAC 440, that lost about 1.3%. And if you combine the day before decline, that's about 2.7% decline. So it's the largest, right, decline in a year. Likewise, if you look towards the bond market, bond yields also rose. Initially, it fed back a little bit, but if you look at the widest increase for yesterday is as much as 10 bips. And if you combine the day before as well, it's the largest 2 days increase that we have seen in French government bond yields. I think this weakness came amidst political uncertainty, right? And that follows a Macron decision to actually, a surprise decision, in fact, to actually call a snap election. And that was despite a push in the European Parliament election, right? For us, the intention is unclear, right? Even though there are a couple of theories that are floating out there. Some of his party members also voiced their displeasure yesterday, and that I think weighed on the equity markets a little bit. But I think the takeaways for me, a couple of important points I'll highlight here. I think firstly, through this election, macro presidential role wouldn't be affected, right? That's one. Two is if you look at the current opinion polls and if you look at the outcome of the EP election, there's likely going to be a very weaker political alliance post this election. And that brings me, I guess, to my last point as well, is that the weaker political alliance that would make any efforts, it would impede any efforts on further fiscal consolidation. And if you look at the weak fiscal position of France right now, that makes it especially sensitive to sort of any political uncertainty in the country.
Mm-hmm. Mm-hmm. So, Zhong Liang, let's move over to China for a bit. So, we have the China CPI and PPI data this morning. What are your thoughts on that?
Yeah, so I think the CPI came in in positive territory, so it rose about 0.3% year on year, but they actually missed our consensus estimates. Consensus estimates are expecting for 0.4% year on year. If you look at PPI, on the other hand, that came in above expectation, but is still firmly in sort of the deflationary territory. I think, to me, in my view, the below consensus CPI data, that is quite consistent with some of the recent data that we have seen, right, coming through from China, right? If you look at the economic surprise index, that is sort of on a downtrend. It has been declining steadily, and it's sort of flirting with that zero line, right? So it's been quite weak in late. And of course, the concern with consumer price sort of deflation is that it feeds itself into a downward spiral, right? What I mean here is that consumer would become reluctant to spend, right, when they, in anticipation of price decrease going forward, right? And on the sort of producer price side, if we do see continued deflation, that would actually squeeze profit margin, and that will weigh down profits as well. And of course, that's going to be a negative for China corporates.
Mm-hmm. Mm-hmm. Okay, so before we end the call, Zhong Liang, two crucial releases tonight, like you mentioned earlier on this show. So the CPI and the FOMC meeting. Give us a preview on these.
Yeah, I think the focus tonight will be on the core figures, right? Because that's the stickier component of the inflation report. Consensus, if you look at consensus, they are expecting sort of a 0.3% month-on-month increase in core inflation. If it pans out expected or it's surprised to the downside, it's very likely market would cheer on this data, right? Because it means that this inflation process is continuing, right? However, if it's surprised to the upside, say maybe 0.4% month-on-month or 0.5% month-on-month, I believe we might get a sort of a pullback in equities. Government bonds would actually sell off as well on the back of a repricing of Fed expectation. Dollar, on the other hand, would likely strengthen, right, because more hawkish expectation as well. And I think another focus for the CPI data would be likely on the stickier components of inflation, and those are your shelter, your auto prices, and also the healthcare prices as well. Moving quickly to I guess FOMC meeting is, in fact, maybe just one interesting point I'll highlight that it's rare to see FOMC rate decision coming right after CPI data, right? I think a common question I get is this CPI data going to be part of consideration for the FOMC? In my view, I think that I doubt that this CPI data will be taken into consideration, given that the FOMC actually started yesterday already. Right? Today is just a communication. Nonetheless, we believe that Fed is likely to stand pat tonight, and that's pretty much in line with what they are expecting as well. If you look at some of the recent comments from different Fed officials, they have somewhat turned a lot more hawkish after the March inflation data. So it's very unlikely that the April inflation report gives them that confidence to cut in this meeting. But that being said, we are still confident that the disinflation process will continue. That would give the FOMC additional comfort to actually cut in the Q3 of later part of this year, somewhere in the Q3 quarter.
Very exciting times ahead, Zhong Liang. So thank you for your insights.
Thank you as well. Thank you for having me.
Okay, so we've been speaking to Zhong Liang, Investment Strategist and Chief Investment Officer at Standard Chartered Bank on the BizTech Asian Midday Market Watch. I'm Samantha Voon, and this video and podcast will be on our website, www.biztech.asia's social media platforms, as well as our syndication partners' TV stations, radio stations, and website. Thanks for tuning in.